Well, global foreign direct investment in the first half of this year rebounded as major economies recovered from the effects of the COVID-19 pandemic. That's according to the UN Conference on Trade and Development's latest Investment Trends Monitor report. FDI flows surged to more than $850 billion in the first 2 quarters of the year, mostly driven by businesses buying or merging with overseas rivals. That money makes up 70% of the investments lost last year during the height of the pandemic. Almost half went to developed countries, a threefold increase from 2020 levels. New investments in the world's poorest economies declined by 9%. And UNCTAD says it expects the flow of foreign investments to exceed pre-pandemic levels this year. It had previously projected that to happen in 2022 or later. Well, let's get more on this now with Astrid Sulastarova in Geneva. He's Investment Trends and Data Section Chief at the UN Conference on Trade and Development. Welcome to the program, Astrid. So your latest report shows that global foreign direct investment flows have rebounded stronger than expected. Tell us more about what's driving this recovery.
Thank you very much. As mentioned already in the report, developed economies saw the biggest rise of FDI, which reached already an estimated 424 billion. This is compared to a very low level in 2020. But it is basically more than 3 times the exceptionally low level in 2020. In Europe, the bulk of growth was due to reversal in countries with significant conduit movements. Several large economies saw sizable increases on average, which basically on average, they remain only 5% below the pre-pandemic quarterly level. Inflows to the United States were up by 90%, driven entirely by the surge in cross-border merger and acquisitions. So the first reason of this increase is due to the re-jump of FDI flows to developed economies. Flows to developing economies also increased significantly, totaling 427 billion in the first half of 2020, with growth acceleration in East and Southeast Asia, around 25%, a recovery by near pre-pandemic levels in Central and South America, and an uptick in several other economies across Africa, West and Central Asia.
So have you found there to be a direct correlation between how countries have recovered from the pandemic in terms of which countries enjoy the most recovery in foreign direct investment?
Well, foreign direct investment is an investment which is long-term. So you don't have a very 100% correlation between the recovery in terms of the pandemic as well as the FDI flows. But it's true that, of course, in developed economies where the pace of vaccination has already quite increased, it's having an impact on FDI. In 2020, you saw a big decrease in FDI flows. You have a values near zero of FDI in Europe. And therefore, now we come back to the more normal level of foreign direct investment. In developing economies, first of all, I'd like to say that these are preliminary numbers. They are based only the first half of the year of countries that report quarterly data. Therefore, the more complete analysis we'll see in our trend monitor in January and also in our World Investment Report in June.
Yes, and we are seeing several challenges both in developed and developing economies right now. We're seeing supply chain bottlenecks, labor shortages in several markets, an energy crisis in many countries, as well as inflationary pressures. What impact might that have on foreign direct investments going forward?
Yes, as we mentioned also in our monitor, there are risk factors, as you mentioned. And these risk factors they are going to have an impact on foreign direct investment. So we will see. We are now having only the data for the first half of the year. We will see how it's going to be reacted. We will see as well in the second part of the year. But as you mentioned exactly, the risk factors are such as the duration of the health crisis, the pace of vaccination, especially in developing countries, as well as the speed of implementation of infrastructure investment stimulus. They remain important factors of uncertainty. And we see this as well in the difference between investment in industry as well as in infrastructure. In infrastructure, there was a big jump. If you look at international project finance deals, we saw a jump of 32% in terms of numbers. But if you look at the greenfield projects, which are mostly related to the industry and is quite important for developing countries, their projects are declined by 13%. So there is a kind of, you have an increase in FDI data, but we have quite a lot of financial flows there. You have an increase in infrastructure investment related projects, but you have a continued decrease in industry.
Okay, Astrid Sulastrova from UNCTAD, we do appreciate your time. Thank you for joining us on Money Talks.